Hello, my name is Matteo Daste. I'm a partner at Mayor Brown. I practice in the emerging companies venture capital division of our firm. That means I work with a lot of tech companies, investors, and startups. And today I'll be talking to you about something that I see often in my practice, especially working with a lot of foreign founders and foreign investors, and that is flips. So what are flips? Flips essentially are a form of corporate transaction that enables a foreign company to relocate to the US in order to have a structure that it's better suited to go to market here, as well as to raise capital from local investors. A challenge that many companies face coming into the United States from abroad is that they're often structured using local laws, corporations, or at least business structures that reflect customs and usages of foreign jurisdictions. And while those legal entities might work well in those jurisdictions, at the end of the day, they can create barriers for capital raising in the US because, especially at the early stage, familiarity with a predictable legal system, as well as an efficient set of precedents to structure fundraising in a very predictable way, comes at a premium. In the US, generally speaking, every startup is set up as a Delaware C corporation. And the reason for that is not really, a misconception related to any, tax benefits or tax savings. There's none of that. The main reason why companies are set up as Delaware corporations is because Delaware has a very long and elaborated jurisprudence of corporate law dating over 200 years. And as a result, having a body of law that's very detailed, articulated, and predictable, and has been interpreted over the years by the courts, lowers the risk of operating in that jurisdiction. And obviously, the same from a US perspective is not going to be true if an entrepreneur has set up a company in a foreign jurisdiction. As a result, most investors in accelerator programs and other angels interested in investing in tech companies require founders to organize their business as a Delaware C corporation. The challenge becomes when the founder comes from a foreign jurisdiction and, let's say, has raised capital and started operations in a foreign country. At that point, there is already an existing legal entity with shareholders, with investors, with employees, and so forth, with intellectual property in it. So how do we make sure that that legal entity is somewhat translated into a structure in the US that's fundable, as if it was a purely domestic enterprise, but at the same time, it retains those foreign characteristics, enabling it to retain a workforce and operations in a foreign country to take advantage, say, of lower operating costs, or the fact that a portion of the team is located in a foreign jurisdiction. And that's what flips are. Flips essentially are a corporate setup that contemplates at least two companies in the chart. Typically, the two company structure or dual company structure requires that a parent corporation, which is a Delaware parent corp, and a foreign subsidiary, which is a legal entity set up in any foreign jurisdiction where the company originates from. The Delaware corporation is the 100% owner of the foreign company. And that, enables essentially the Delaware corporation to be the owner of the enterprise value that's created abroad, but at the same time to function as a filter so that capital can be raised in the US. In order to arrive at that result, what happens typically is that the foreign corporation has its stockholders and investors exchange their equity interests and other interest in the company for equivalent securities in the Delaware corporation. It's pretty simple if we're talking about a foreign company that has not raised any money and has a nominal capitalization. So the foreign founder stock can be exchanged for Delaware founder stock. The moment the foreign corporation has investors, it becomes a bit more tricky. Typically, if we're talking about unpriced securities or convertibles, the equivalent of convertible notes or safes in the US, those are normally exchanged for equivalent securities issued by the Delaware corporation, meaning safes or convertible notes of with equal economic terms. However, if the foreign company has raised additional capital through priced equity rounds, it becomes a bit more tricky, and the share exchange may not always work due to tax considerations. So in that case, the flip, instead of being a share exchange, is often structured as a so-called domestication or migration, meaning that the foreign company is domesticated into Delaware corporation, and it retains its original structure, yet it becomes embodied inside the Delaware corporation under a specific statute that Delaware provides that allows a foreign entity to be migrated into Delaware. Oftentimes, following a domestication, the foreign domesticated entity is liquidated, because otherwise you would have a duality of existence of the same so-called legal entity. And then the newly formed domesticated Delaware corporation will establish a foreign subsidiary under which the operations of the foreign company can be replaced and operated. But that's a more rare case involving a situation where a foreign company already had the price round. The majority of the cases that we see, especially with companies about to access accelerator programs in the US or seed capital, involve situations where the foreign company only has raised a seed round with angels or early stage investors. As a result, we don't have to deal with immigration, but a simple share exchange will suffice. Obviously, the share exchange has to be performed in the right way, because if it's not done the right way, there can also be adverse tax consequences. We're not going to be talking anything tax today, beyond the scope of this micro talk. I think the takeaway point for today's discussion is simply that if you're a foreign founder, you don't have to ditch your company altogether and set up a brand new Delaware Corp. There is a way in which the foreign company can be placed under the new Delaware entity, and there is a way to preserve the enterprise value, as well as to preserve the equity investments in the form of convertibles of those foreign or angel investors, so that you can efficiently raise capital in the US and go to market. As the flip enables the foreign entrepreneur to have a Delaware setup that will enable the company to retain personnel in the form of consultants or employees, set up an advisory board, have an option pool available for all these participants and so forth, as well as enter into commercial agreements with partners or clients or pilot engagements in the US. So there are efficiencies in both setups, and we see this being the prevalent way for foreign companies to organize themselves when they move to the US to raise capital and launch operations. So I hope you found this macro talk useful. Happy to answer any questions. You'll see our information on the website of Mayer Brown. Another resource that I want to point out today is that we have a website, a portion of website dedicated to startups, where we have posted a set of documents that entrepreneurs can find useful for consultation, as well as to help them quickly organize their corporations if they don't want to go through us. That service is available, and you can consult it at mayerbrown.com. Thank you.